So you're thinking of investing passively. Well, there are two options, index funds and ETFs. Usually both track passive indices that you can replicate using an index fund and an ETF. So when should you go for an index fund and when should you go for an ETF? Well, ETFs trade like stocks. They have an ISIN, they have daily liquidity, they trade on the exchange. You have a bid and ask, and you can buy those ETFs like you would buy normally a general stock or common stock which is listed. Secondly, ETF units are deposited in your demat account by default, whereas index funds, they need not be deposited in your demat account. So usually the choice is that if you do not have a demat account, you would rather buy an index fund. If you have a demat account, you could buy an ETF. Remember that the cost of ETF is lower than an index fund. However, there is some extra cost which is in the bid and ask spread of the prices that are quoted on the exchange. Usually ETFs and index funds are passive indices, but there is also evidence in the other markets other than India where people have gone for active ETFs like ARK in US or Bitcoin ETFs, as well as there are ETFs in India that replicate a certain factor like a momentum, quality, low volatility, and so on. So there's a lot of choices in products. Obviously, these products have different characteristics. They enable different kind of design of portfolios and asset allocation. Hence, when you are selecting these products, take into account the overall asset allocation. Do not get swayed by the recent past performance. They have a role in your portfolio. It's always a good idea to consult an investment advisor, but otherwise do your own research before you buy them just based on past performances is usually not a good idea. Well, thanks for watching, and I hope to bring you more educational videos like this.